Hello everyone and welcome to this new video. Today I will talk about two important stocks. First, Tesla. After all the news that happened last 2 days, last week, after the earnings, after the travel, the trip from Elon Musk to China, and all the hype and the movements done so far from Tesla, the normal question now is what next with Tesla? Then I will talk about Amazon that reports earnings today. So let's first talk about Tesla that made a huge movement here yesterday after the good news coming from China, as I said, with the trip done by Elon Musk. Then the stock opened with a huge gap. Of course, here we had the gap of the earnings, then the gap with 15% movement yesterday. It was really interesting to see that movement after the weakness we saw during months from Tesla. So now what's next after achieving almost $195 yesterday, then it dropped a little bit to 189 before the close. So I will suggest two scenarios with clear entries. First, we need to understand how to trade the gaps. Okay, here we have a big gap. And if we refer to the past, to the history of the stock, we will see that we had a gap here. Then basically, and most of the time, gaps are filled. It's not an absolute rule, but most of the time. And here we will see that from that gap, the stock went exactly, almost like really almost with a cent here, like exactly there to fill that gap, then continue the movement. So here I would prefer to wait before buying. So if you would like to buy, or like buying a call, buying stocks, I would not buy at 190. First, I will buy in case the stock drops. And the support here will be exactly filling the gap, which would be that zone here, 172, 177. Exactly 172 would be the perfect scenario like that. We will fill at least that gap. You will tell me here, for example, there is a nice gap here. Why not? But it seems to be so far. So at least filling that gap here, then why not recovering from there? It's not the my favorite scenario because for that we need to see some bearish catalyst, and this would be, for example, would happen, for example, with some weakness from Amazon or Nvidia. So let's see what will happen tonight. But here, this first scenario would be like the less preferred one. Okay, the next scenario would be the one that I think has the highest probability to happen, and it will be here the breakout. Of course, I would wait the breakout of the high of yesterday's session, which was around 199. Then if we go there, of course, here we have a very strong resistance. So I believe that we should take profit. If we buy there, if we buy the breakout, we should take profit here before resuming the main trend, which was here, which is always the bullish trend. As you can see here, exactly gap, then we'll resume. Once we break out the support here, we'll resume here the main trend. That's what I think will happen. We will see with both scenarios in few weeks Tesla at 230, in case with one condition, the stock should clear that zone here, 207, 206. If the stock closes above 207, 206, the next target would be 230. Why? Because here it was the last support, okay, from this movement here. And with the polarity concept, last support here will become of course, the main resistance. So two scenarios for Tesla: buy above 199. And when I say above 199, it should be the breakout in daily basis, of course, or at least 4 hours close, not with 1 minute or 2 minutes or 5 minutes. So at least 15 minutes close or daily close. Or if it struggles to continue, then we will wait for that zone here, 177, 172. It does not mean that you cannot take the risk, but it will be with a lower probability. Okay, so this is the thing with Tesla. Now with Amazon that reports earnings tonight, I have two data here to share with you. First, 7% is in average the move in the recent quarters. It means like if you take the last 4 earnings and we calculate the average, Amazon moved with 7%. Okay, so when you do your strategies here, you should respect that potential range. The most important data here will be the implied volatility, the potential range given by the implied volatility. It is 8%. It means the stock has, with high probability and accuracy, has the possibility to go up by $14 or to drop by $14. It means from where it stands right now, 182.5, around that was the last price from the pricing in options. The option market, through the implied volatility, is expecting a potential target around the range 95, so 195, 197, or to drop to 170, 168. So if you do your strategies, please make sure to calculate the break-even to include these targets, okay? Because if you do a strategy while the target is 200 and the break-even is 200 from the upside and from the downside 140, you have a low probability to reach that range. And here the question, how could we find that 8%? So here I will share with you this nice technique. It will be through options. It's simple. You will calculate here. Well, here I counted with the 182.5 strike straddle, so buying a call, buying a put, and it will be the sum of the two prices. Then you add that sum to the current stock price, and you subtract also the same sum from the same strike, which is the price. Okay, and here if we do 6.7 plus 8.10, so we are about 14.5, 14.8 till $15. So the market is expecting a movement, a range by $14 up or down. So here, for example, strangle, delta neutral strategy, iron condor, double diagonal, double calendar as neutral strategies would be a good idea for Amazon. So that's what I wanted to share with you today. I hope that our trade would be profitable with Amazon. Why not Tesla? Let's see what will happen, and I will keep you updated with the news, and I will share with you the trades in the group for our members. Thank you and have a good day.